Hi there, it's Justin Lubino with Senior Advisors, and it's February of 2023. And this time of year, we get a lot of questions from people about the Medicare bills they're receiving, and specifically, if they're in a higher income bracket, they have these adjustments called IRMAAs. And I wanted to create this video to go into some more detail about those IRMAAs and answer some of those frequently asked questions we get related to the IRMAAs. So we're going to go through in this video a list of questions you see here. At the end, we're going to recap those questions as well to make sure we've touched on all of them. But just to quickly run through the list, what is IRMAA? We're going to explain that. Is there an IRMAA for Part B and Part D? We're going to go through that. What income is being used to determine the IRMAA? Does my spouse have an IRMAA too if my spouse did not work or is not working? How do I appeal the IRMAA? When do I appeal the IRMAA? What happens if I actually make more money than I tell the government in my appeal? How long would the appeal process take? If my spouse if we file a joint tax return, does my spouse also have to file for an appeal? What proof do I need to show the government when I'm appealing my IRMAA? And lastly, do I have to appeal again in the following year? So we're going to touch on all these questions in this short video. The first one, what is an IRMAA? Well, it's an income-related monthly adjustment amount. It's an additional amount you have to pay the government for both Part B as in boy and Part D as in drugs if you're in a higher income bracket. Well, what are those income brackets? Well, this is specific for 2023, but there's essentially 6 income tiers. The first one is the base, which that means you're not paying an IRMAA if you're in the base, which is below $97,000 for singles or $194,000 for joint filers. Again, these are 2023 numbers. What premium do they pay? They just pay the base amount, the $164.90 per month. But if you're in one of these higher income brackets, you can see they're all the way up to the top bracket, over $500,000 for single or $750,000 for joint filers. You have to pay an additional amount for Part B, which is called an IRMAA, and also an IRMAA on your Part D drug coverage. This IRMAA on the Part D plan is what you're paying the government. This is in addition to the premium you pay for the Part D drug plan. Okay, so you're paying the premium for the drug plan to the insurance company, and then you have to pay this additional amount to the government for the Part D IRMAA. And then the last column is just the total. We sum that up to let you know this is the total monthly amount that's due to the government if you're in one of these higher income brackets. All right. This does not include your Medicare supplement or Part D premium or Medicare Advantage premium if you've chosen that plan. And the income that's being used to determine which IRMAA you're going to pay or how much IRMAA is the last tax return the government has processed. And they're looking at the modified adjusted gross income, which for most people is going to be the same as your AGI or your adjusted gross income, but they do add back in the tax-exempt interest. So it's possible it could be slightly higher than your AGI. All right? And again, they're looking at the last tax return. So for 2023 premiums, the government's last tax return they have is the 2021 tax return. So we're going to get into an appeals process if you're no longer in that income bracket. But before that, let's go through the timeline of events. So what happens here? What's the trigger for that IRMAA letter? Okay, the trigger is when you enroll in Medicare Part B as in boy. So it could be when you turn 65 if you enroll in Part B, or if you enroll at a later date in your Part B, that's what's going to trigger that IRMAA letter if you're in a higher income bracket. And it takes a few weeks. So you enroll in the Part B, about 3 to 4 weeks later, you're going to get that IRMAA letter in the mail. It's going to look something like you see here on the right. These communications do change frequently, so it might be a little bit different. But essentially, the letter is going to have a little bit of a paragraph that explains what the income adjustments are. If you don't respond within 10 days or some time frame, you will get a bill with those IRMAAs included. And it does mention as well, they apply to Part B and Part D of Medicare. Now, your letter may only include the Part B IRMAA, as in boy, because you may not have enrolled in Part D yet, right? So the Part D IRMAA will be applied if you enroll in a drug plan. So, but this is kind of the structure of that IRMAA letter. And that's the trigger for you to start the appeal process if you're no longer in that income bracket. All right, so that's going to be after you receive this IRMAA letter is when you're going to start that appeals process. And then a few weeks later, the bill will arrive. So we're going to walk through that appeals process next. So the appeal is for someone who's no longer making that income from 2 years ago, right? So a lot of people retire when they go on Medicare, their income's going to drop off. So they have some sort of life event. And the form that's going to be used, it's called SSA 44, which you can see on the right side of this screen here. And there's 8 pages of this form, but really you're only filling out like 1 page of information. The first page, you're just putting your name and social security number. The second page is the one where you're filling out the information. And all you have to fill in, there's step 1, where you're telling the government what was the life event, which for most people is going to be work stoppage or work reduction. You put the date of the life-changing event. When did you retire, or when did you slow down with work? And then step 2 is where you put the projected income for the year in which the income is going to be reduced. So in 2021, you made more money than you're going to make in 23 because of that work stoppage. So you fill in 2023 for the tax year in that example, and your AGI projected for this year. You also have to give them your tax filing status so they can apply to those tables as well. Okay, and that's basically it. There is a third step there. If your income's going to drop again the following year, like 2024, you would put that projected income for the following year as well. And the key here is not just that it's going to drop, but it's going to drop to a lower tier. Remember those different tiers we talked about earlier. So if it drops $5,000 and you're still in the same income tier, it's not going to affect these IRMAAs, right? So you're only appealing this if your projected income is going to be in a lower income tier. Once you have that form completed, you can bring it to the Social Security office, you can mail it to the Social Security office, but you got to get this information over to Social Security. Okay, one of the questions we get a lot is, well, what proof do I need to provide the government that my income's going to be reduced for my work stoppage? Well, this is directly from that SSA 44 in the instructions pages, and for that work stoppage, the government's essentially taking your word. Your signature is your word under penalty of perjury. You have partially or fully stopped working or accepted a job with reduced compensation. So they're just going to take your word for it, essentially. So if you have a valid appeal, you should definitely appeal it. You could save a lot of money. Obviously, if your income ends up coming in significantly higher than what you project, they're going to come back at you for the difference. So, okay, so here's just a quick example just to kind of illustrate this. So there's a couple, John and Mary Smith. They retired for January 1st of 2023. They received that IRMAA letter from their 2021 income, which was high. They sold the business, or they had a high income year for their job, and it was $800,000, the top income bracket, tier 6. And so for each of them, they were going to be charged $636.90 per month. Well, the reality is they're retired now. So for 2023, they're still fortunate enough to be in a high income bracket, but it's lower. It's $250,000 instead of $800,000. So that's actually the third income tier. And remember that chart from earlier, instead of the $636.90 a month for their updated income, it should be $361.20 a month. So that's a big difference there. For the two of them, it's almost $7,000 for the year in savings if they appeal this, right? So how do they appeal? They use that form, SSA 44. They check off work stoppage, the date of the event, 12/31/22. They put in the reduction year, 2023, and the projected income of $250,000. They're married, filing jointly on their tax return, and they expect it to continue to stay at $250,000 the following year. So they just skip step 3. So, and they submit that into Social. They have to sign the form. They submit it into Social Security, and they're going to just adjust and remove the IRMAA for the higher amount and put them back down to the lower income tier. And it's going to save them all that money for 2023. All right. Now, last thing I want to touch on is the bill. There's the bill. We get a lot of questions on the actual bills themselves. This can be very confusing, especially the way they break down this information. The couple things I will tell people to look at, if you're getting an IRMAA, it's very possible that your first bill when you go on Medicare does not include the IRMAAs. So you might just get a 3-month bill that has the base Part B premium, which again this year is $164.90 per month. So you might get that bill, which would be for about $500, $494, right? And you pay that bill, and then a few weeks later, or maybe a couple months later, you get a really big bill. And what they do on that second bill is they include the IRMAAs that they missed out on for that first quarter. And so people get, concerned, and they think that's going to be the new amount. And it's really kind of like a catch-up bill, that second bill. So what I tell people to look at are the key things on that bill. are the coverage period, number one. So how many months am I being billed for? Some people think they're getting this $1,200 bill and it's for 1 month. And that's not the case. Remember from the chart earlier, the highest 1 month could be is at $637. So if you're getting a $1,200 bill, it's not for 1 month. So you want to definitely look at the coverage period. How many months is this bill for? You want to look at the last payment received. So did you already make that payment from before, that $494 or whatever it was for that last bill? And then the third thing you want to look at is the total amount due. And what I recommend people do is you add up the total amount due plus the last payment received and divide that by the number of months in the coverage period. Okay, in this example, if someone's in the third income tier and they already paid the $494.70 for that first bill, the second bill comes in at $588.90. And if you add up both of those numbers, you get $1,083.60. But it's not for 1 month, right? It's for, in this example, let's say it's for 3 months on the coverage period. Okay? So you divide that $1,083 by 3, and you get the $361.20 per month. Okay? And that, if you go back to the income charts and that third income tier, that's the correct monthly amount. So even though these bills may not make sense, if you look at those key things, that should help you kind of back into the number and see if it matches the correct income tier for you. All right? And that's basically it. So I just want to make sure we hit all these FAQs we said we were going to hit. We explained what is IRMAA. Is there an IRMAA for Part B and Part D? Yes, there is for Part B and Part D. What income was being used to determine the IRMAA? That's that MAGI, or Modified Adjusted Gross Income, from 2 years prior. Does my spouse have to pay the IRMAA too, even though she hasn't been working? Yes. So if you file a joint tax return, it's a joint income, which means both of you will have to pay that IRMAA. How do I appeal the IRMAA? We went through that SSA 44 form. When do I appeal the IRMAA? When you get the IRMAA letter in the mail that explains your IRMAA. What happens if I make more money after I have appealed the IRMAA? Well, the government's going to come back at you for that difference 2 years later when you do your tax return. How long will the appeal take to process? Generally, it only takes a few weeks. So you submit that SSA 44, and it generally gets processed very quickly, and the adjustments get made. If my spouse and I file a joint tax return, do we both have to appeal the IRMAA or just one of us? Well, you both have to appeal. It's the premiums are for each individual, so you both have to submit that SSA 44 to have that IRMAA removed or reduced. What proof do I need to provide the government to appeal the IRMAAs for work stoppage? Your signature, remember, that's your proof. You're signing the form, you're telling them I'm done working or I'm reducing my work, this is my projected income, that's the proof. And then do I have to appeal it again next year? So when you first go on Medicare, this whole process is going to happen. And then every year in December, if you're in a higher income bracket, you're going to get another letter from the government that explains your IRMAAs for the following year, and it's based on the last tax return they have at that point, which again is going to be like 2 years behind. So it's possible you have to appeal this twice. It should be caught up after that point, but it is possible you have to appeal this twice. And those are the IRMAA FAQs. I hope you found this video helpful, and I recommend you subscribe to us on YouTube, like the video, put some comments below so other people will see the video as well, and hope you have a great day. Thank you.